Everyone, Mapletree PAC share price got a huge hit on Friday after the poor set of results. You'll be asking right now, how bad is the results for Mapletree PAC? And at the same time, you'll be asking, if interest rates continue to fall in the coming November and December Fed meetings, would Mapletree PAC resume back its previous status of being one of the REIT that will be able to perform? Well, in this week's video, we can explore this in great detail. See the blue circle over there, ladies and gentlemen? Yes, it is a huge gap formed on Friday because of the 10 cents fall in the share price. Now, does this actually represent a buying opportunity? Well, look no further. Let's look at this set of results. You can see, ladies and gentlemen, that Mapletree PAC actually had a negative DPU. Remember, in all our videos, in all our classes, we've mentioned that no matter how good the turnover, no matter how good the NPI, if the NPI, or rather the DPU per share, continue to fall, rest assured, ladies and gentlemen, that the share price will continue to be hit. And true enough, this time around for Mapletree PAC. Well, delve no further, look at other REITs and their subsequent share price movement. You'd see that when they did release the results in our past videos, if it's that kind of trend with the DPU falling, you can bet for sure that the share price will take a hit. Never mind that the net finance cost, as you can see over there, is only down 2.6%. Rather commendable right now, considering the fact that previous quarters going into 2024 for Mapletree PAC, almost every quarter you see a huge jump of between 20 to 30 million increase in the interest expense for Mapletree PAC. Look at the results, ladies and gentlemen. If essentially the results is a tale of two cities, it's clearly and something that we've warned about for the last 1.5 years. First, that Singapore assets continue to do well. You can see that the occupancies for all the Singapore assets are actually up on a comparable basis. But unfortunately, all the foreign assets from Festival Walk in Hong Kong, China properties, Japan properties, as well as the Korean properties are actually down on a comparable basis. So once again, if you look at the rental reversion, which is key in helping you to grow the DPU, you can see once again it is a tale of two cities. It is essentially all negative for its foreign assets, minus 6% for Festival Walk, minus 2.9% for its China properties, minus 9.5% for its Japanese properties, and minus 27% for its Pinnacle Gangnam in Korea. So much for K-pop, ladies and gentlemen. It popped the other way around. But for the Singapore assets, you can see that the positive reversion in rental continues to post on a positive basis, chief of which is actually being led by Vivo City. Now, the third point to understand, ladies and gentlemen, in this set of results is the fact that Mapletree PAC has actually chosen to highlight, an interim valuation, for its 3 properties in Makuhari submarket in Shiba, Japan. Now, you can see, ladies and gentlemen, that it's shocking. It's shocking, that when you look at the valuation for its 3 properties, they are actually down 22.9 million for M Point. Then it's down 74 million for Fujitsu Makuhari building, and it's down 27.5 million for Makuhari Bay Tower. The total down is 124.6 million, or roughly 10% of the total portfolio. Now, ladies and gentlemen, these are the things that we warn about: falling occupancies, falling reversion rentals for its overseas assets, and particularly vulnerable Japanese assets for which you have seen the tenants leaving, and then right now they have to convert to multi-tenanted buildings. Now, that is the kind of warning we have given to our GCP Global students, which comprise family fund offices, index fund managers, as well as high net worth individuals before this sell-off. So if you ask me, why is Mapletree PAC doing a revaluation, an interim valuation of its Japanese assets? I think if you look further as what is given there, they are exploring, finally, okay, the possibility of pursuing divestment opportunities. Of course, doing a divestment for these three assets at this level of time would actually incur a loss. Well, anyway, this was the feedback that I've given to the Mapletree PAC management when we met up before we left for our European trip. Yes, ladies and gentlemen, we have been away for the last 3 months. Thankfully, and thanks because of the huge rally which we caught at the bottom for REITs before June, and many of our GCP global investors actually made a lot of money because of that. So back to Mapletree PAC. It is a great opportunity because once again, take a look at the chart, ladies and gentlemen. When it was nearing 120, and it was leveling out between 120, 130 for the last 7 months, prior to June, we told our investors that, hey, it's a great sign of bottoming. And true enough, when it went to 150 and it rushed up to 150, we told our investors to sell. Now we are in a very greedy position. Remember to be greedy when things are bad, especially for the better REITs. As I've been quoted in the Business Times interview previously, bet big in terms of crisis, for which I've been highlighted many times, and once again, you'll be asking right now, is this nearing for Mapletree PAC? Now, if you ask me right now, I would reckon that the macro environment is looking okay. Okay, first, take a step back. Number one, in our June class, we, as well as our previous YouTube video, have mentioned that the REIT market in Singapore has undergone 3 bottoming, right? And the third bottom, which bottomed out at 624 thereabouts on the 27th of June, was the last bottom. And we reckon that it's therefore will be able to ride on cutting interest rates. Yes, ladies and gentlemen, within this week, REITs have gotten jittery because of the fact that there is labor market conditions in the US looking good, inflation not coming down as much and as fast as what it is. And remember, next week is the week preceding the presidential election. So there will be volatility, something we have prepared our investors previously, But we are more near the bottom rather than the top. So essentially, I think it is a better option to be betting on the upside, particularly for Mapletree PAC. 2, look at the share price. It's nearing the 120, 130 triangle formation, that we have seen previously etch out in the last 6 months. I don't reckon that this time around it will drag out over 6 months. I think it will be sooner than expected. We may be in time also for a Christmas rally. So essentially, you are poised in a position to benefit twice as what we have done and able to do so. And even look at valuations 3. One is that at 178 cents, if you actually analyze it, you are actually getting just above 6% yield for Mapletree PAC. A yield level which at that level does mean that there is a good protection or a good margin of safety on the downside. 2 is that if you look at the NAV, yes, it has fallen down to 171, but at the current share price of 134, you're trading at close to 25% discount, one of the highest ever in its trading history since it got listed. And fourthly, I think now that the market has digested the worst on Mapletree, if they can actually get to sell the 3 Japanese assets the next quarter or so, or indicate to the market, that a sale is on the horizon on a meaningful basis, I think there's a very good opportunity that the share price may bottom. Mind you, ladies and gentlemen, as what we have told you, we have made our money betting big in times of crisis. We reckon that we're nearing another of this great opportunity. So once again, we would be in Singapore also for the next 1 month before we travel again. Hope to see you. Do like our video and subscribe to be